Hey, what's up, everyone? Good morning. Hope everyone's doing well. Today's Friday. It's the end of the week. I was going to say February, June 23rd. The month's almost gone realistically, and we're going to see what we get into the end of this week. So far, historically, again, weaker week, meaning more sell side after the June OPEX, and also we had FOMC. So far, so good on that front. What we're going to be seeing today, we're going to break down some of our analysis realistically towards the end of the session, but we had a decent downside leg overall in the market on the overnight session. We broke through yesterday's lows, right? There's still accumulation to the downside. I think we could potentially close out the week a little weaker as long as we maintain under some key levels. So I'm going to break down what those areas are and what the distributions are. But first, we got to go through some of the news. Some of the news realistically revolves around tech, right? Recently, we've seen a lot of tech getting sued, and there's lawsuits against tech. We also have Jerome Powell that came out in the last few days, and we'll break that down. So day two of Jerome Powell concluded yesterday, I should say. But first and foremost, talking about tech, right? A lot of lawsuits throughout 2023, and regulatory actions against some of the big tech names that we all know very well. So first, it was the FTC versus Microsoft over its deal to acquire Activision ATVI, followed by several attempts to break up Google's advertising business, as well as coming antitrust suits from Amazon, which were the most recent ones. So it was just sued over deceptive practices this week, and other names are now in the firing line. So these control the lion's share of activity that take place on social media. In the latest news, Canada has gone through with plans that would require digital firms to pay domestic media organization for content. The legislation known as the Online News Act has triggered many warnings from Meta, which said it will now end access to news on Facebook and Instagram for its users in Canada. So very interesting. I'm no longer in Canada, but that hits close to home. It had fought a previous attempt when Australia passed a similar law in 2021 before brokering a deal with the government, while it recently found itself in the crosshairs of California and even lawmakers on Capitol Hill. So regulatory headwinds are also blowing in Europe, where popular online platforms and services, mostly notable as Twitter, face a ticking clock to comply with Digital Services Act by the end of the summer. So legislation, which is expected to become a global benchmark in GDPR, will make it easier to report illegal content as well as provide more information on the recommended content and revamp algorithms to prevent disinformation. Content generated by AI will also have to be cleared by labels, while targeted advertising will be restricted and platforms will face annual audits for symmetric risk or systematic risks. Increasingly enough, some of the biggest gainers this year have been tech naturally. They've been rallying 30-40% off the lows of the annual session, right? A lot of them are even higher than that. We saw NVIDIA into the hundreds, right? Low 100s, mid 100s, now trading 400, for example. So a lot of this rally in tech has been supporting the upside in the broader market. And a lot of people are calling BS on this, trying to short tech on the way up. But I think that it's a general sector rotation where it will rotate out and then continue on to the up leg. So the most recent stock rally carried by AI speculations, and AI speculations is carried by big tech giants, right? That's the main concept of this. Forces that encourage competition are not only rising from outside forces, but are growing among big tech giants themselves. So rumors continue to circulate about Threads and Project 92, which would be Meta's response to Twitter and allow Instagram users to directly transfer their followers and user information to the new app. In typical PR fashion, Elon Musk overlaid a popular Twitter thread that discussed the news by saying Earth cannot be exclusively under Zuck's thumb, and even declared that the Meta CEO to cage match, which the latter responding to the challenge on Instagram. So very interesting stuff there. Let's see if Zuck and Elon actually fight in a cage match. That'd be pretty fun. Other than that, right, big tech, I think there's still strength in them. I think that there's still a potential sector rotation out of tech into other sectors. I think financial sectors are going to catch a bid fairly soon. So I do like longs on financials. I think that tech gets rotated out of into probably August or something, and we still catch a bid in tech. I don't think that tech's massive overvaluations are going to be undermined by this pullback. I think that earnings season is coming up as well, and we'll see a lot of information that comes out of the earnings season. But overall, realistically, I think that tech has still a lot of room to grow, and that could be one of the still decent pickups into the end of the year in the next few years. Jerome Powell also right? Day 2, Federal Reserve Chair Jerome Powell is committed to revamping up oversight of mid-sized lenders, according to his testimony before the Senate Banking Committee. As for rates, Powell said it's not so important right now to continue aggressive hikes as we're relatively close to where we need to get. So inflation has dropped fairly significantly over the last few months, and Powell is getting closer to his Fed target, but still, there is a pricing in for 2 more rate hikes by the end of the year. So he also said, while losses were recorded earlier he didn't say this, but while losses were recorded earlier in the week, the testimony did move the market slightly on Thursday, which ended up mixed. We had a nice little rally into the end of the day into a top distribution block, very, very key area. And now we're dropping back below that after a flurry of hawkish moves by the central bank. So we had a fairly hawkish statement. Realistically, Powell still talked about the potential rate hikes to come, which would realistically kind of propel this downside move until we get some of these dips being bought. So right now, as I can see it, if we talk about S&P futures, first of all, I want to thank everyone that came out over the last 2 days, that came out to our free open room at TRADEPRO Academy. We had a great time, right? There was a lot of trades, and today we're opening some downside. We're back into the private room close, but if you guys want to check that out and want to see what it's all about, you guys can go and see community.tradeproacademy.com, where you guys can get a lot of that information, get access to when we do open our rooms as well. Overall, in the market, my plan today, we did get some downside. There's a lot of volume opening up right now into the bottom end of this distribution around these low 90s, high 80s, but we're below 2 pivotal areas. We're below the 43.93 and we're below 44.0504. So as long as price stays below those areas, we can see somewhat of an offer. I would say that maybe they could get a pop before the actual opening session, right? Or into the open, I would say maybe the first half an hour of the open, maybe they'll try and pop, see if that lower end of the distribution actually holds as resistance. But realistically, my downside target on today is 43.68. If we get above 44.05, that downside motion is canceled. You have to remember that Fridays are typically more bullish. Today we have the close of a historically bearish week on a 4-day week. So you have to keep that in mind. So right now, what I want to see is how the 43.93s trade for sell and 44.0405 trade for sell. I want to see a little more downside on today, but I don't think a pop off the open is out of the question into some of the single prints to the upside. So I hope everyone has an amazing weekend. I hope everyone had an amazing week. I want to see you all at community.tradeproacademy.com. And thank you, Logan. I appreciate that. Get back to the beach, drink some mojitos. I already had a few mojitos, so that's why we're going to trade even better today. No, I'm kidding. We're going to take it slow today. It's Friday. We have some swings to the downside. The swings are up over 60 points right now. This was something that we talked about in our weekly analysis that we share with our team, looking for larger moves and directionality throughout the week. So far this week and other weeks, we've been very spot on. So the week's already done. We don't have to do too much. I'll be probably trading micros, and I'll see you guys in our trading room that we're about to open. And I'll see you guys next week. So have a great weekend and chat soon. Thank you very much.